Hello everyone, welcome to the first class of our Forex tutorial series, and I'm excited you are here. My name is Shane by the name. Today we'll be covering the fundamental building blocks of the Forex trading. We will discuss market chart structure including impulse and correction, chart patterns and resistance, and also trading session. So what is market structure? So this refers to the way price movements are displayed on market chart. It's like visual roadmap that helps trader understand the market's behavior over time. So this structure includes various patterns, trends, and formation that can be analyzed to identify potential trading opportunities. So in this session, we are going to talk about the four concepts. Although we have so many concepts in market structure, but for the sake of this strategy, we are going to focus on only four concepts. So the first concept is impulse and correction. Impulse is a strong directional movement in the market. It can be either up or down. Correction is a temporary pause or reversal in the trend. Quick example. For example, now in the market, you may see a price move very strong like this. What's happening? You may see price moving strong like this. Then for some hours or minutes, you can see a few correction. Then you see a bigger movement, another correction, then a bigger movement, another correction, a bigger movement. So we always see this in every market. So on the other way, for a downtrend, you may see a very strong impulse like this, a little correction, impulse, a little correction, impulse. So the long one that is very strong is the impulse, while the second is the correction. So that's how we have it. So let me show you an example in a good market. So in a good market, we've seen this as an uptrend. As you can see, this is an uptrend, but while having an uptrend, some people say forex market is a zigzag market, but what they actually want to say is impulse and correction. For example, this is a downtrend right here before an uptrend. During the downtrend, we have this impulse, a little correction, impulse, a little correction, impulse. Although it failed right here and change its direction. So while changing the direction, we also have impulse, this little correction, impulse, a bigger correction, impulse, correction, impulse. So we hope it either change direction or still continue the trend. So that's an example of impulse and correction. So how to enter this impulse and correction in this strategy will be explained later. So okay, so the next concept is chart patterns. Chart patterns are recurring formation that can indicate potential price movement. Some patterns include double tops, double bottoms, head and shoulders, and triangles. So we have so many numbers of chart patterns, but in this strategy we focus on double top and double bottom. In other way, you can call it M pattern, W pattern. So let me give you a quick example of M pattern. For example, now for an M pattern, when you can see something like this, a price moving like this, coming down, moving like this, then form an M pattern. After forming an M pattern, still continue. The market now continue downward. That is M. As you can see, this is M structure right here. So this is called M pattern. So on the other side, for W pattern, you may see price like this, then form a W, and then price continue upward. So this now for W. So that's why it is called double top, double, and this double bottom. M pattern, W pattern. So let me show you an example that in the good market. W pattern here, then we have M pattern here, we have W pattern here. So you can see this is W, continue like this M pattern, continue downward, and then we have go back, you have W pattern here, then upward. So this an example of W pattern and M pattern under chart patterns. So this is all we need. So the next concept will be support and resistance. Support and resistance are price levels where the market has historically struggled to move beyond. So support is a level where buyers are more likely to enter, while resistance is a level where sellers are more likely to enter. So live market, you may be seeing something like this. Usually a range market. So there will be a support right before below, and we have resistance. So the one at the top is called the resistance, where the price is rejecting from the top, and the one we have at the bottom is called the support. So what we'll be noticing here is that when every time the market reaches this support, it usually rejects. As you can see from the past, it is rejecting. Also at the resistance level, it is also rejecting. So what we'll be expecting here every time we get to the support is to buy at this level, and when it gets to resistance, we sell, or else the market now break above and turn to when markets break above resistance turn to support, because it is now at the bottom, so it's now support. So anyways, we will talk about this later when we really need it. So that's for support and resistance. Talking of trading sessions, different trading sessions around the world can have an impact on market volatility. The major trading sessions are the London, New York, and Tokyo. In London sessions, that's when we have pound GBP. That's when we have bigger movement in pound and any related pairs. And in New York, we have bigger movement in USD pairs. While and also in Tokyo, we are going to have bigger movement in JPP, JPY, and Australian dollar, AUD. So what are the importance of these sessions in trading? So in trading, especially if you are a day trader or an intraday trader, you will always have a limited time to trade. You can't trade the whole day. You will stress yourself out. So if you are a GBP trader, you are more likely to be successful during London sessions. And if you are a USD trader, you are more likely to be successful in New York session. That's when the market will give you better pips. And if you are a JPP or AUD trader, that will be during Tokyo sessions. That is for day trader and intraday trader. Swing trader can trade at any time. So mainly in this strategy, most of the pairs that will be given everyone to start with, everything will come from New York session. You can be playing during your London time or Tokyo, sleeping at Tokyo time, but when it gets to New York time, that is business time. That's when you look for a setup, or you set your alarm or whatever to get you notified for any setup. So that is about session. It's about big movement. It's about the right time to trade. Not every time you trade based on session. So I think that's all. Right. Today we've covered the basis of market chart structure, including the impulse and correction, chart patterns, support and resistance, and trading sessions. So remember, forex trading requires practice and patience. Keep learning and experimenting with your strategies to find out what works best for you. So in our next class, we'll be focusing on entry, how we are going to enter market during the impulse and correction, how we are going to use our M and W patterns, how we are going to use our support and resistance, and how we are going to enter trade during sessions, basically the New York sessions. So make sure to subscribe to this channel and hit the notification bell so you don't miss any updates. Peace out.